It's time for the 0DTE morning market analysis. How you doing? I'm Coach Ernie, and I'm here to guide you through our 0DTE trades today. We trade out of the money butterflies primarily. It's our primary strategy with extreme risk to reward. That means we take very tiny risk going after a much larger reward, which is really counter to virtually what everybody else does because we do it the professional way. I am a former institutional trader and hedge fund manager. I know a thing about being a professional trader. So today, the focus is on CPI. Yesterday was PPI. Both of them are inflation indicators. Here we can see at 8:30 this morning, no more than a little over half an hour from now, we're going to get the CPI, both the core and the month over month and the year over year. And of course, we have some other things coming up in terms of economic reports, Empire State and crude oil, but they pale in comparison because everybody is waiting for the CPI today. They were also waiting for the PPI, and it had a very large impact on the market after it was released. As you can see, the numbers were extraordinarily good, indicating that at least it appears as if inflation is waning. And although the PPI is not really what most marketers are, or I should say traders, are looking at, today it's all about the CPI. That is the Fed's favorite inflation indicator. They love it. And so the big question is, if we come in with a low print, much below the consensus view, will the market take off? Will the market think that, oh my God, we are out of this morass. We are not going into a recession. This time it will be different. Well, that's the hope, I'm sure, by many Wall Streeters. And we'll be taking a look at that. Now, yesterday they had that hope. And let me show you what happened. It's kind of interesting. I need to go over here and see if I can get my trading view up and running. Here we go. And what we want to look at is yesterday's market. Okay, so let's take a close look right here. This is, let me indicate it. I'll put a big arrow on it. This is where the PPI was announced, right there. And you can see right after it was announced, big push up. And then it just sort of gave it all back. And by the time the market had opened, it kind of gave it all back, kind of rebounded a little bit, where we had our opportunity for our trade, by the way. I'll talk about that a little later. And then it moved down. Now, of course, we were already positioned for this exact move. And many of our members put a out-of-the-money butterfly down here and made bank. All right, so just as I had predicted with this arrow here. We're looking for something similar today, but we'll get into that. We don't know. Could we get a print like yesterday and that it keeps on going up? I really don't know. No one ever knows. So that's why we are asymmetric traders, taking small risk, large potential reward. All right, what we do every morning, let me go to the big head here so we can give you the spiel. That's the CPI. We are 100% on top of that. It is causing all kinds, well, not all kinds, but a very specific kind of very high IV this morning. And that's going to set us up for another trade, just like we had one yesterday. So yesterday was a great day. We had two primary 0DTE trades. One we take pre-market, or actually it ended up we took it a little bit after the market opened. And then our out-of-the-money trade, as you can see here, that turned out spectacularly. So today I suspect that we'll have that same kind of opportunity, two big trades. All right, now we can go to the big head. And how you doing? Coach Ernie here. And what we do every morning, besides doing a focus on one aspect of the market while we're setting up our 0DTE trades, is that we determine what is our setup for our primary trade. That's the out-of-the-money butterfly, an asymmetric butterfly. We're looking to do a bunch of things. We want to obviously capture the market movement We don't know which way the market's moving, so that's why we put on asymmetric trades. We don't manage it when it goes against us. When it goes towards our direction, we manage it to the best of our ability. And with that, we can control our drawdowns, our volatility of returns, and maximize the return on capital. So that's the basic strategy. If you want to learn more about it, go down below. You can click on our school community. We call it the 0DTE Academy. And you can learn all about the strategy. It's a vibrant community. People are churning away, talking and discussing the strategy. You'll get support. You'll get a full course on 0DTE trading. There are live events. We had our first live event on Monday, and those are all archived on there. We're going to have another one on Friday. So it's a fantastic community. It's only $35 a month. There is no other value like it on the interwebs, guaranteed. All right. So getting back to what we're here for, and that is to set up our 0DTE trades, we are looking for three things. We want to know where the VIX is. The VIX will tell us whether or not premium is decaying at an increased or decreased rate. In other words, is premium bloated or not bloated? And from a butterfly's point of view, we like when that premium is bloated because that has the effect of delaying the rate of decay, giving us much better pricing on our butterflies. It costs us less. We have much more potential. Gamma is much less. Makes for a great early morning trade and a fantastic, very aggressive trade for the directional trade as well. So we want to look at volatility. That's the VIX. We're also going to look at implied volatility that morning to see sort of fine-tune our exposure to that amount of volatility. Now, we're an anti-fragile type of strategy. That means that as volatility grows, our strategy gets much stronger, almost at an exponential rate. And so this morning, even though the VIX is still, kind of like right on the edge of low, the implied volatility is super high, and we're going to see all that. So we look at volatility. We look at market direction because we are directional traders. And so we're looking at, hey, do we have a bullish or a bearish bias? That's all really based on some simple trend analysis. And then finally, now that we know how big, which direction, we want to know when we're going to get in. What's going to be the entry event? And that's all based on our volume profile, market structural analysis. That'll tell us where the levels are in the market that are going to provide significant support and resistance on the edges and the various crevices and features of the profile. We can tell where there's going to be strong support and resistance. And so we do an analysis, sort of a scenario analysis, and figure that out. And we try to take that trade in the morning session because that's where volatility is at its highest. All right, so I've told you the whole strategy. There you go. So by the end of this little analysis here, you'll know exactly what to do when that market opens and before at 8:30. All right. So let's get to it. Let's first go to the VIX. And we can see here that currently we're at 18.63. That puts us squarely or at the lower third of the Goldilocks zone. That means that we're over here on the left, we're looking at butterflies between 20 and 30 wide. You can see that we did the other day pop up quite a bit in terms of our volatility. We got up to 22, but we receded. So we're getting up into that middle part of that Goldilocks zone, which is what we like. So then we can go much wider flies and much more profit potential. But today it's between 20 and 30 wide. The next step is to look at the big ass fly for two reasons. One is it gauges the implied volatility that morning, and it also tells us whether or not we have another trading opportunity, one of our two trading opportunities, and that's putting on an at-the-money 50-wide fly prior to that CPI report and try to capture that vol crush that's likely to happen after the report is released. So we're going to be looking for the range 20 to 30 wide. That's the Goldilocks 1. All right, and so we're looking for this debit scale up here. You see it goes from 5 to 35. Where is it on that scale? If it's lower, then we go to wider flies. If it's higher, then we go to narrower flies. All right. So that's our next step. Let's take a look at our Think a Swim. I have a big ass fly all set up. There it is. And wow. Yesterday we were at around, oh, I forgot. I think it was around 16 or 17, something like that. Today we're at 11.5 for the debit of this. That means that this whole fly relative to the zero line has been lifted up. And that is because premium has been delayed in its decay. That's due to the high implied volatility. Options are bloated with more premium. That has the effect of creating greater opportunity and less risk in this at-the-money fly. So that makes it an extremely attractive trade. I mean, look at this. From the standard deviation, we're almost covering the entire width of one standard deviation up and down, even given that the CPI is going to be released today. This is a fantastic trade. So we'll take this morning and see how that plays out. Yeah, so there it is. But the big key part is that it's at 11.25. So that now we have to go back to our VIX chart and see that we are clearly on the wide side. So we're going to be doing 30 wide flies. That will be our second trade. That will be the out of the money butterfly, 30 wide at least. So that's where we stand. Now we got to look at market direction. We can see here, based on our directional analysis, I'm using the hull and the trauma. One uses triangulation, the other one uses a quadratic equation. So they're coming at it from slightly different aspects, but they're both indicating that it's still a directional bias as bearish. So we're going to be putting on out of the money put flies, 30 wide out of the money put flies. But when? What is going to be the impetus for us getting into the trade? And that's all about market structure. So let's take a look at the market structure. All right, we are right here. This red line right here is the top of a current HVN, high value node. We can see here's the bottom of it down here. And between that red line and this green line is what we call an LVN, or I call it, that would be a low value node, but I call it a low volume well, right? Because it's not really a node, it's sort of an anti-node, it's the lack of a node. And we can see that how we marked all this up if I go to a 4-hour chart. Let me just adjust this a little bit. So what we're trying to do is pick off where all of the volume nodes are and features of the market. As you can see, here's our HVNs, and then here's an LVN in here. And that's actually where we're at. We're right inside this LVN. And so we're using that markup to determine where are our entry setups, potential entry setups. What are our entry scenarios? And of course, we're going to be doing it in the morning. Between the morning session is defined as 9:30 to 12:30. And these vertical lines over here are each day I'm marking up where that morning session is. And so if we were to zoom in, you'll see exactly what that looks like now. All right, so there we are. So this is today right here. You can see Wednesday, January 15th. Here are the structural levels that were all marked up from that big picture of the market structure. And so we can easily identify them. We color code them so that we can easily identify where the boundaries of the nodes are. So we can see here's that big HVN that was right here. Here's the bottom of the other HVN right here, right? And so that means between this red line and this green line, we are actually in the low volume node, or what I call the low volume well, or just the volume well. It's the lack of liquidity or volume. So we expect pricing to move pretty quick through here and tends to consolidate inside the value nodes. And so we pick off all the structural levels there that are based on the features of that volume profile. And those are the areas where we're looking for activity like this. Now we're a downtrend, so we're looking for price to pull up into one of these structural levels, find resistance, and then move down. And then when that happens, we'll place an out-of-the-money butterfly, maybe like down here, like this. In the same way we did the exact same thing yesterday, where we placed one down here. And it came down, and you make lots of profit. Of course, you get out before it reverses. In this case, yesterday, it came right back. But I would imagine that everybody got out before that happened, making really good profit. All right, so we're going to look for something similar today. And when that event happens, when it finds one of these structural levels, then we'll put that out of the money butterfly based on our criteria, which is putting on an asymmetric trade, typically 1 to 10, risk to reward. And that's how we roll. There you go. That's the whole story. Back to the big head. All right, so now you know the entire layout of exactly what we're going to do this morning. 2 potential trades, the big ass fly, and we have the, well, it's 8:08, and so we still have another 22 minutes before the CPI is released, and we'll see. Hey, you know, even after the CPI is released, if the debit price on that big ass fly is still low enough, we might take 3 trades. Who knows? We'll see what happens. So that's the kind of day. I mean, these are the days that we live for. Volatility, lots of premium collection potential, and everything about higher or heightened volatility makes our trading a lot easier. We get better price movement. We get more premium potential. We have lower gamma. We can put on bigger flies. We can really lean into the trade, and it's really a joy to trade 0DTE on days like today. And it's funny because most other traders, they're looking at that volatility and they're saying, man, that's like a tempest in a teapot, you know, I got to run away from all that fire. But we are anti-fragile. We run into the fire. That's how it is. All right. Good luck, traders. Hope you have a great and successful trading day. Don't forget about the 0DTE Academy, the link below. Trust me, you join that. You're going to find resources in there that will help you become a pro trader. That's guarantee. It will help you become a pro trader. And it's the entryway or the path towards my coaching service, where we teach people how to be consistently profitable, independent, and trade at a professional level. You'll learn how to trade just like an institutional or Fed fund or a Wall Streeter trades in a prop trading firm by going through my service. All right. Thank you very much. Time to go. Coach Ernie, out.